Hey, Dustin, it's good to see you. Today, we're going to talk through the headlines, specifically Silicon Valley Bank and the markets. Of course, the Fed has been working really hard to stem a U.S. banking crisis. So we want to sort through all of this, and we want to start with what's most important for your clients. What do they need to know?
Well, first, they need to know, my investment clients, they need to know that they're not affected from this event.
Okay.
It's important to make a distinction between deposit bank accounts and an investment account. So when you deposit funds with a bank, that goes on the bank's balance sheet. It goes on the bank's balance sheet as a liability, along with the loans that they've got as assets. So in one sense, it becomes part of one big pot of assets and liabilities for the bank to manage. Now, when we talk about an investment account, for example, one of the major custodians like TD Ameritrade, Charles Schwab, Fidelity, those accounts do not go on that custodian's balance sheet. Okay, they're held in a segregated account for your benefit.
Okay, so it's good to know that what your clients, their money is not being affected by what's going on with Silicon Valley Bank. That being said, I think that the next logical question is, but wait, I have a bank down the street that I bank with. And the FDIC, as we know, only insures deposits up to $250,000. So what if somebody has more than $250,000 in their deposit bank?
Yeah, so if you've got some of those uninsured deposits above that $250,000 limit, you might want to consider diversifying banks. Actually, we've got a really interesting program through one of our partner banks where we can help clients do that. We can actually help clients gain up to $150 million worth of FDIC insurance working through a single bank. It's interesting to understand how that program works. Won't get into it now, but we can offer clients up to $150 million FDIC insurance and have them get that insurance through a single point of contact and access all those funds through one bank.
Yeah, that sounds great.
Yeah.
All right. So the next question is,
I think a couple other things they might think about, opening an investment account to diversify some of that bank risk if they've got uninsured deposits. I mean, with an investment account, again, a segregated account for your benefit, you could even buy treasuries, and you don't have to worry about FDIC insurance on treasuries. It's the only investment that I can mention is technically considered risk-free, because you're purchasing that investment directly from the U.S. Treasury.
I see. Okay. The next question I think that a lot of people have on their minds are trying to figure out if and how what's happening now is similar to what happened in 2008 with the financial and banking crisis.
Yeah, I would say it's different in one respect, and I would say, unfortunately, it's similar in another. So it's different in the respect that this appears to be much more contained, not nearly as widespread. A lot of the things that happened with Silicon Valley Bank were a textbook case, unfortunately, of hubris, greed, and mismanagement. And that's specific to that institution. In this respect, however, it does appear to be similar as long as the Fed and the federal government continue to give banks the impression that their losses are going to be backstopped by the Fed. I would fully expect that we would continue to see banks take on unnecessary risk and expect to see the government try to counter that by issuing unnecessary regulations.
Okay. All right. Well, thanks for walking through that. Then the last question, Dustin, is kind of simple. What are you watching for next?
We're continuing to watch for, and we fully expect that we may continue to see some, increased volatility. A lot of it, headline driven, and we may see some problems with some additional banks. Just important for clients to understand their investment dollars, investment accounts, not affected by these events, and as far as client portfolios, we build those portfolios conscious of events like this, conscious of market volatility. It's why we build portfolios with an appropriate amount of risk for an investor's risk tolerance and their time horizon. And it's why we always include some risk managed strategies in all of our clients' portfolios to lay off some of that risk.
Right. It's good to hear, though. Like, you always plan for that volatility, you, Dustin, but it's not that we know what the headline's going to be. So that's why I feel so much better after you and I have these chats. Thank you for making time. I know it's very
And,
busy for you today.
yeah,
But
and of course, if
yeah.
anyone has any questions or concerns
Mhm.
with portfolios, reach out to me. We'll talk about it. We'll talk about it immediately.
Yes, and you have the great option of calling or texting. How do we get a hold of you?
830-476-2505, or they can reach out on the website to book a free chat, longlivemymoney.com.
Awesome. Dustin, thank you so much.
Thanks, Aaron.